There's an
Yeah,
important thing, like if someone who doesn't know anything about the business, just briefly describe the difference between a depository institution, direct lender like a bank, and a cross
yeah,
country, which is like a correspondent lender. Because I've done all three also, but a lot of people
yeah.
don't understand the distinction.
Exactly. Yeah. So your depository lending, so in this case, PNC Bank, essentially they have their own set of rules. Obviously, they follow your guidelines from Freddie and Fannie, the big national corporations, but they make their own rules as well. And then they can lend their own money too. So, usually they leverage those assets from the bank and then they turn around and lend that to their clients. Then when you move over to a correspondent, so it's sort of like a midway between like a retail bank and then a broker because they're not really a bank. So they don't handle checking or savings accounts or anything like that, but they do lend that money to clients strictly for mortgages. And then, in terms they have an investor on the back end giving them that money to
Yeah,
lend it out. So
yeah. And so, like as I describe it to clients, the depository institution, because I worked for a bank also at one time, it's like they do everything from the application to the lending the money and oftentimes servicing it.
that's right.
Correspondent does everything
Yep,
up to servicing the loan. And the
exactly.
advantage of the correspondent is it's like almost like a broker where you can go shop rates. But
Exactly. Yep. Yep.
yeah,
Exactly. You had a few options for that. Mhm.
yeah.